Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 2nd of October. Starting off with Attis Oil and Gas, which has already created a bit of controversy on Twitter. Here we've got a trendline break from last month through, I suppose, what's that, the 0.014 level. End of day close above that broken September resistance line, and especially above the 20-day moving average. The purple line there could take the shares up to the top of that rising trend channel from the end of August, as high as 0.025 for those who are into micro-minnow stocks. Next up is advanced Oncotherapy, where we've got a solid green candle opening at the low and also opening at the 200-day line and moving up from there. The view here is that at least while we're above the 200-day moving average at 30 pence on a mid-price basis, we could hit the top of that rising trend channel from March as high as 50 pence, and really only back below the floor of the channel, what's that, 28 pence or so, really killing the idea of a near-term recovery for the shares, hopefully 50 pence by the end of the month or soon after. Another relatively obscure stock is next, Corcel, and here we've got not much of a chart to look at, but it looks as though we've got enough to say that we're in a rising trend channel from middle of August or early part of August, top of the channel there running up towards 1.55 or perhaps a little bit more, maybe up to 1.7, and the upside valid there while we hold above recent neckline resistance at 1.15 on a mid-closing basis. You can just see the MACD starting to cross positively at the moment. On to another relatively quiet stock here, Eenergy. Here this is also looking quite encouraging, if I can get the right EPIC code out there. Here we've got the shares they gapped higher yesterday through the 50-day moving average at 6.62 pence. Current situation is that looks as though we're in a wide rising trend channel from way back in the beginning of the year, basically January, and the channel heading towards the 12.5 pence level. That upside valid while we hold above the 50-day line at 6.62, and that could be seen over the next 4 to 6 weeks. Just wanted to cover Greatland Gold because obviously it had a little bit of a bull trap surprise middle of last month, peaking at around 27-28 pence and coming back quite painfully to the floor of that rising trend channel from June around 17 pence. But we've had good days of the shares consolidating in a positive way. Today support above the 30-day moving average, and while we're above the 30-day line and the floor of the channel at 19 pence, looking for hopefully a retest of the best levels of the year to date, and the top of that channel currently pointing around 30 pence. Hopefully that will be seen sometime later this month. Itaconix is the next contender, and here the reason for the inclusion is the gap higher today, broke that trend line a few days ago from September and the 20-day line at 1.72 pence, and while we're above the 20-day line, looking for a top of December price channel target as high as 3.4 pence, hopefully over the next month or 6 weeks or something of that time frame for that particular stock. Stock which has been requested and gets requested quite a lot, as you might imagine, is Novacyt. Here we had the joy of the gap through 500 pence and the late April resistance at £4.73. The low since then has been £4.91, and it was a sort of failed gap fill, which is normally a bull sign as well. So let's assume that while we're above the old April high at £5.29, we could hit the top of the overall March trend channel at £7 over the next month or so. On to another pharma area company, Orphan, where we're still celebrating the way that the shares have managed finally to break out. They had a rather extended consolidation between May and the latter part of last month, getting blocked at 15-16 pence. But looks as though with a weekly close around the 20 pence level, we should get over the near term, maybe the next month or so, a move to the top to that resistance line projection from May, currently pointing as high as 25 pence. So above, let's say, 18 pence or so, looking for 25 on open Orphan. Another favourite of the moment, Omega Diagnostics. Here we've had a nice spike higher through the late September resistance at 86 pence. While we're above that, looking for 105, and the big picture target here up to £1.40 if we can get a decent close, maybe a weekly close above 94 pence, which was, or 95 pence in fact, which was last month's intraday resistance. Just a couple of stocks to go now. One stock which has delivered its initial upside there, 3.8 pence, which was the line of resistance, rather obscure one from last September, and that's the top of the channel from that month as well. The view now is that if we can get an end of day or end of week close through 3.8 up to, I suppose, 4 pence would be nice. Then we could have a fresh leg to the upside, and that would then target that line of resistance from November 2018, currently pointing as high as 8 pence, and that would be a 1 to 2 month target. At this stage, everybody back below the initial September resistance at 3.25 pence, really delaying the upside scenario. Finishing off with the stock which has been rather frustrating for the bulls over an extended period, but maybe coming back into favour now, like many other unfavoured stocks that we've seen over the course of the year. Here we've got TLOU Eenergy, and just breaking that line of resistance from May around the 2 pence level. A weekly close above the 50-day line, 1.93, and at least above 2 pence could be enough to deliver a move towards the 200-day moving average at 2.73. At the moment, the best case scenario would be a move to the top of that broadening triangle that I'm just drawing at the moment, as high as 3.5 pence, hopefully by the end of next month. But TLOU on its way, at least while we're above the recent resistance around 1.75 pence. Looks like it's finally done its recovery move. That's it from me today. More updates probably over the weekend.